Just like almost every small cap, Palantir has gotten destroyed over this last year. This stock not only has downtrended with a lot of other stocks, but the bad press that this company has received lately has made investors hesitant to get in. But in this video, I'm going to share my thoughts on Palantir and whether or not I think this stock is a buy right now. Now, for many people, this is going to be a hard stock to be able to understand. And it personally took me a while to be able to understand really what the business is truly about. But basically, this company forms contracts with other companies where they will receive data from that company, and then using their algorithms, they help companies determine what is best for their business. If this is a stock that you are interested in after watching this video, I suggest spending a little more time than you normally would on understanding this overall business. But over this past year, this company's valuation has gotten cut in half. And even though this company has fallen over 50%, some would say that this company is still overvalued. With the company holding over a $30 billion market cap, they are only projected to have $2 billion of revenue in 2022. This doesn't seem like a lot, and off of first glance, I would say that this is terrible, especially in this kind of market where we've seen companies have revenues that are greater than their market cap. They're actually not profitable yet, which is another caution flag. So just looking quickly at this company, the stock doesn't make sense to be valued at $30 billion. But after taking time to look over this company, I see some solid opportunity for this company to make some huge gains over the next 5 years. First, the company has an extremely solid business model, and it will be difficult for companies to stop using their product. Second, I really like the confidence not only of the CEO, but of the company as a whole. They're expecting to have at least 30% revenue growth over the next 5 years. And quite honestly, I think that's attainable. And this is where I actually want to start running their numbers. If the company achieves 30% revenue over the next 5 years, by 2026, they're going to have $5.5 billion in revenue, which once again doesn't sound like a lot. However, I believe in 5 years, this company could easily have $1 billion in net income. And with their current projections of 30% revenue over the next 5 years, they would only need 18% of their revenue to hit the bottom line in 2026 in order to achieve $1 billion of net income. I think this is definitely achievable. I mean, software companies will achieve better margins than hardware companies do. And the fact that this company has a sticky business model means they'll be able to keep their clients while charging more for their products, leading to a higher margin. Also, the company currently has no debt, which means all of their money that they're going to be getting in free cash flows is going to go right back into building their business and ending up leading to nice solid profits. There have been some people that have been trying to compare this company to Google. And at first I was thinking, are you kidding? Like, how can you compare a company that isn't even profitable to one of the largest companies in the world? But then I looked deeper into what this company is actually doing. They are right now in a position to be able to produce similar amounts of revenue growth and achieve net income like Google did back in 2017. Now, of course, it won't be the same numbers because Google in 2017 was still larger than what Palantir is right now. But when we look at Google back in 2017 and 2018, the company started to focus on profitability. And we can see that once this company made this change, the share price increased significantly. Between 2017 and 2018, Google went from 11% of the revenues hitting the bottom line to 22% of their revenues hitting net income. And in 5 years, I could easily see Palantir doing something similar. But with all that said, Palantir has greater growth than Google did back in 2017 as well. And that's why I believe that Palantir could actually have $1.2 billion hitting the bottom line in 2026. And so even if they increase their shares to 2.4 billion, which I think is a huge increase, the company would have a forward PE of a 32 in 2026, which in my opinion, this company still would be undervalued because I'm projecting that this company would still be able to get 25% revenue growth at that point. Plus, according to analysts, their TAM or total addressable market could be somewhere near $200 billion. So with about $5 billion in revenue growth in 2026, they would only have 4% of the total addressable market. And personally, I think that this company could have 10 to 20% of the market share by 2030. And assuming that the total addressable market continues to grow similar to what it has over the past 5 years, we're looking at a TAM of $360 billion. And that would mean with 10 to 20% of the market share, they would have between $36 and $72 billion in revenue. And that is why I believe that by 2030, this company could easily have between a $200 and $300 billion market cap. Now, one thing that I've seen and heard from people is that they are diluting shareholders and they've added twice the amount of shares to the market. So here's what I have to say about that. The company didn't issue new shares. These shares were already available when the company went public. So I wouldn't worry about them truly diluting shareholders, especially in the near term. Like I said, the company is already debt free and the amount of cash that they're burning is nowhere close to the amount of cash that they have available right now. So with all that said, do I think that Palantir is a buy right now? Yes, however, this is not going to be a stock that I'm going to pile all my money into right off the bat. The reality is that with this company, if they continue to get bad news, we could easily see this stock go to $10. So I'm okay taking my time with this position, because if it goes up, then great. But if not, I get to continue to add to my position while reducing my cost basis. And if this company gets to the $300 billion market cap like I expect it could in 2030, that would be almost 10x from the current share price. And you would be doubling the average return on the S&P for the next 10 years. But if I'm going to be honest, this is going to be a wild trip to get there. And so even though this company looks overvalued in the near term, I believe that over time we will start to see how undervalued this company truly is. But I hope you guys enjoyed this video. If you don't mind, would you consider destroying that like button? It helps this channel immensely, as well as comment down below your thoughts on Palantir. Would love to hear your thoughts on that. And if you're new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoy the rest of your week, and we'll see you in the next one.